Welcome to Invest Insights. I'm Abby Maloney. I'm joined today by Andrew Wright, the CEO and founder of Franklin Street. Andrew, welcome.
Thanks for having me.
Despite the challenges of this past year, Franklin Street had a number of successful leasings and sellings of retail plaza entities. While traditional brick and mortar has continued to struggle this year, how have you capitalized on market opportunities and transformed your process to continue to be successful in such a turbulent market?
Well, the evolution, or resiliency. I mean, I think things evolve, right? Where what was a use before, now, things change and something backfills it. There were a lot of empty blockbusters over time, yet there's something else in there today. And so I think in retail specifically, you've seen uses adapt several times in its history, and no different really now. Some trends you saw beforehand, I mean, in terms of it's still evolving. Some trends that have been very popular is the medtail concept. A lot of medical uses have moved into more traditional neighborhood locations that are more convenient, ample parking, amenities around them. So, there's a lot of changes in the reimbursement model on healthcare that's going to continue to drive that trend. There's also still thriving businesses. So while certainly a lot of people were hurt during the pandemic, business, at least here in Florida, has rebounded pretty quickly, and hopefully it stays that way. But good locations are good locations. People want to be in those spots that are easy access and high desirable. So you've still been able to in those unique locations drive it. The hardest hit are going to be the non-grocery anchored, kind of inline tertiary market type, more mom and pop businesses. They were struggling before. In an Amazon economy, they will continue to struggle. So, hard to predict how that will play out. I'm not so optimistic, on that segment. But in general, good locations continue to do well, and some will figure out the next use, coming in.
When we spoke to you, and speaking of those unique opportunities, when we spoke to you for our Invest Tampa Bay report, you remarked that the I-4 corridor could literally be one of the best investment corridors in the entire world. And when compared to the other booming markets in Florida, including South Florida, why do you have the utmost confidence in the transformation of this particular area?
Growth would be the word. And let me be clear, South Florida is booming as well. The entire state of Florida, the Sun Belt by extension, it's the third most populous state, and it's growing at one of the fastest growth rates across the country. When you compare South Florida specifically to the Tampa Bay area, it's about double the size in population. It's about double the size in GDP. So it already is a much bigger market, more dense market, where the I-4 corridor has a much larger growth rate. So if you look at population growth as an example, South Florida trails the state average, where the Tampa Bay area, Orlando, that I-4 corridor area is ahead. So, you're still seeing a lot of people move to South Florida, but more people as a percentage are moving here. A disproportionate share are moving here. And the same is true on GDP growth. You're seeing the economy in this area grow faster. And it's, short stretch to see how that I-4 corridor could get to be, more similar. Again, it's double the size down there. So I think that growth rate has a lot of runway. There's also a lot more land to be developed, down in South Florida, because you're up against the Everglades there. You really have a long, narrow corridor for development. So it's going to be, harder for that, transportation issues and other quality of living issues. But, by comparison, new affordable housing prices are going to be more difficult down there. So I just think that there's a number of things that over a long period of time, you're going to see more growth in the I-4 corridor than you are in South Florida. Now, I would, talk about a couple things down in South Florida, particularly with the migration coming from the Northeast, a lot of business relocating. Southeast Florida is much more appealing to businesses fleeing New York and New York City than Tampa, Orlando, or Jacksonville would be. And as they relocate down there, I think the real estate markets are going to perform very well. You're going to bring a lot more jobs, down there. And so it's whether or not we'll be able to keep up in the I-4 corridor with the head start that they have, both reputationally and also the quality of the supply that's in place. So, we do a couple major projects throughout, these areas. Tampa's got, one of the largest redevelopment projects in the country, the $3 billion Water Street Tampa project. But, they still have to catch up.
You just said that South Florida is attracting more businesses from the Northeast. How can the Tampa Bay Orlando corridor area be more attractive to attract those CEOs that are relocating at the moment?
Yeah, I think it's telling our story. I mean, the Tampa Bay area, the I-4 corridor has, a lot going for it that, South Florida does not. I mean, just traffic, I'll start with that. The convenience of the market, the cost of living, is another point. Good access to private schools. I think we all, as a state, education, something that holds us back, and not for the C-level people, but for all the workers in line. Good quality education compared to people coming from Ohio or Michigan or New York. I mean, they're taking a step back in some respects. So trying to focus on that, trying to focus on our public transportation system. I think the rail project that's been ongoing for years, connecting South Florida to Orlando, is a fantastic start. Getting people being able to move around is not just it's economically beneficial. People who can't afford cars or long commutes all of a sudden have access to jobs much more affordably. So I think in Tampa we have a lot to offer that we don't talk about. We have 3 professional sports teams in the Tampa Bay region. By the way, I got to plug a Stanley Cup champion, a World Series runner-up, and now in the Super Bowl, first home team to host the Super Bowl. That type of notoriety, people coming here, the Riverwalk development that that happened in Tampa, really focusing on that quality of living is key. And I think if we can work together more to tell that story and partner together on the economic development side to be proactive in recruiting, that they're going to do more than their fair share.
Over the next 12 to 24 months, there will be ongoing challenges with distressed and special assets. How are you transforming your process and preparing your operations to provide the best services for these situations?
Well, advisory, is the key in all of our businesses. We're not trying to sell our services. We're trying to solve your problems. And I think in this instance, there's a lot of factors that impact the severity of distress. So, the hardest hit clearly is the hospitality business, hotels, business travel, not bouncing back very quickly. Right behind it, that neighborhood non-grocery anchored retail, right behind it is going to be struggling, pretty rampantly. And it's how long can those businesses hold on, underlying them. And then ultimately, if you're an owner of real estate and all of your tenants are going bankrupt and you have a mortgage on it, then, kind of cascades all the way down through. Stimulus, particularly Stimulus 2.0, is meaningful. There are some targeted, between the employee tax credit and PPP2, that with some hospitality magnifiers that are designed to shoot in the arm, in those industries specifically. Obviously, hospitality and tourism is the number one industry we have in this state, so it affects us all pretty. That stimulus disproportionately should come to us. That's a different situation than if it doesn't show up. So I think really trying to be on the front lines of the programs and the happenings, trying to give people as much clarity, as much crystal ball as no one can give a crystal ball, but to the extent you do have some visibility of how other stores are performing or various things that that are happening. On the banking side, working with banks that have distressed assets, it's really trying to understand their portfolio in much greater detail, the composition of tenants, starting to classify those tenants into who do we think would be at risk versus to say restaurants are at risk. That's not true. I know of several restaurants who had the biggest year of their career, their histories in the fourth quarter of last year. I know other restaurants that are closed for good and never coming back. So it really is that nuanced detail of understanding the circumstance in each situation and then trying to figure out probabilities of success and paths around. So it's just having good data and having it in a timely way, I think is the best thing that we can be doing.
Over the course of your career, you've been honored with multiple awards in leadership in business, including being voted Real Estate Forum's Best Boss of the Year. Through handling the challenges and events of this past year, how have you personally transformed?
Well, I really ramped up. I mean, first, leadership is really about service. And I've always felt that, from the very beginning. That's why the company's not named the Andrew Wright Companies. It's about a broader purpose of us all working together for the betterment of ourselves, professionally, personally, and then our communities by extension. And that I believed in that, and that concept, that ideal never has showed itself in my career like it did in March of this year, because it transcends work. I mean, people are fearful for their personal safety. They're fearful for their loved ones. They're obviously fearful for their financial security, kind of a lot of uncertainty of where to come. And, I'm 40, I just turned 40 a few months ago, and
A young man.
this is my second crisis. It's not my first, it's my second crisis that I've had to operate a business through. And, you learn some lessons, right? It's never as bad as you think it's going to be. It's never as good as you think. It's never as bad as you think. It's always somewhere in the middle, and trying to keep a level head, trying to communicate with people more regularly. We did a number of Zoom calls internally, Zoom happy hours. We actually tried to drive it the other way, where people had more opportunity to build relationships that had pre-existing ones. Hard to start new ones, but to build on existing ones. How often do I have wine nights with people that work with me, or kind of leadership happy hours, or coffees, or things that just really propel engagement on a bigger level. And so I would say that really was transformative, because you have to, in the normal course of our work, we're all focused on the day-to-day activity, but when the work pauses, making sure that you're tripled down into the community of your organization was something that was new to me, and frankly something that we want to continue to build on. We've talked about, like, we've been back in the office since the beginning of the year, probably leading on that issue. We deal with our individual, we have lots of safety procedures around the office, and deal with concerns on a one-to-one basis. But, trying to drive that continued engagement, even beyond COVID, through some of these channels, is something that we're going to try to keep, right? The silver lining of not all that's happened has been bad. And so, that to me, I think is just, far and away is what's been different for me.
Absolutely. Well, thank you again. That was Andrew Wright, the CEO and founder of Franklin Street. My name is Abby Maloney, and you've been watching Invest Insights. Andrew, thank you again.
Great, Abby. Nice speaking with you.
Hey everyone, don't forget to like this video and subscribe to our channel so that you can stay up to date on the latest business trends from our knowledgeable experts. Be sure to check out the description below for more information on the segment you just watched. Thanks for tuning in.